In this video, we're diving deep into the best RSI strategy for 2025, a method that goes beyond just numbers and levels. We'll combine RSI with price action, key support and resistance zones, trend filters, and even candlestick patterns. All to find those high probability trades that most traders miss. And then, we'll put it to the test. Can this strategy catch the bullish move in gold on the 1-hour chart? We'll find out together. Let's dive in. RSI settings. First, let's talk settings. We're using RSI 14, but here's the twist. Instead of using the default levels of 70 and 30, we adjust them to 60 and 40. Why? Because these levels help filter out false signals and adapt better to modern market volatility in 2025. Level 60 shows bullish strength, and level 40 shows bearish pressure. It's more dynamic and gives earlier entries. Combining with price action. Now let's bring in price action. We're not just blindly buying when the RSI crosses above 40, or selling when it crosses below 60. Instead, we look for confluence. That means combining RSI signals with key support and resistance zones. Here's how. When the RSI crosses above 40, and the price is at a strong support zone, that's a high probability buy signal. When the RSI crosses below 60, and the price is at resistance, that's a great sell setup. You can also add a simple candlestick confirmation, like a bullish engulfing for buy, or a bearish pin bar for sell, to boost your confidence. Add a trend filter. To avoid getting trapped in choppy markets, we add a trend filter like the 50 EMA. If price is above the 50 EMA, we only take buy signals. If price is below, we only take sell signals. This keeps you aligned with the bigger trend and increases your win rate. So in summary, for a buy, first, we check the 50 EMA. If the price is above the 50 EMA, we then look at the RSI. Whenever the RSI crosses above 40, and the price is at a strong support zone, we can enter a buy. If a candlestick confirmation, such as a bullish engulfing, also appears, it adds more confidence to the trade. For a sell, we start by checking the 50 EMA. If the price is below the 50 EMA, we then look at the RSI. When the RSI crosses below 60 and the price is at a strong resistance zone, it's a good setup for a sell. If a candlestick confirmation, like a bearish pin bar, appears as well, it gives us more confidence in the trade. How to set stop loss and take profit. When setting up a trade, it's essential to define your stop loss and take profit levels, based on market structure and proper risk management. The stop loss should be placed slightly beyond the most recent swing level, below the swing low for long positions, and above the swing high for short positions. This ensures that the trade has enough breathing room while protecting you from larger losses if the market reverses. For the take profit, use a 1-to-2 or 1-to-3 risk to reward ratio, meaning for every dollar you risk, you aim to gain 2 or 3. This structured approach helps maintain consistency and long-term profitability by ensuring your winning trades outweigh the losers. Real chart example, gold on 1 hour. This is the gold chart on the 1-hour time frame. Let's see if we can catch a part of this uptrend using this strategy. First, we need to identify the trend. I'm using the 130-period exponential moving average, EMA. Now, the EMA setting depends on the asset you're analyzing. You usually need to experiment with a few values and choose the one that price has respected most in the past. Here, price is clearly trading above the 130 EMA, which confirms a bullish trend. Next, we check the RSI. I've set the RSI to the custom levels of 40 and 60 to better capture short-term momentum shifts. In this zone, RSI has just crossed above the 40 level from below, which satisfies our second condition. Now let's zoom into the price action. We can see that price is sitting right on a trend line, acting as dynamic support. Plus, it's also reacting to a previous horizontal, static, support zone, a key confluence area. Zooming in even more, we spot a potential bullish engulfing pattern forming, which gives us added confidence.
With all conditions aligned, trend, RSI signal, support, and candlestick confirmation, this is a solid buy setup to ride the continuation of the uptrend.
A few final tips. Don't trade every RSI signal. Wait for all the conditions to align. Practice this strategy on demo before going live.
Always pair your strategy with solid risk management. Never risk more than 1 to 2% of your total capital per trade.
And that's it.
The best RSI strategy for 2025 is not about complexity, it's about combining RSI with smart filters and trading with confidence. If you found this helpful, drop a like, subscribe for more trading strategies, and let me know in the comments what indicators you want me to combine with RSI next.
See you in the next video. Happy trading!